Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Okay, welcome everyone to the top stock pick for Monday, October 20th. My name is Andrew Rocco. I am a stock strategist here with Zacks Investment Research. I also do manage the Tech Innovators portfolio. So let's jump into my top stock. This is one, full disclosure, we own in the Tech Innovators portfolio. I also do own a significant position in my personal portfolio. So I just wanted to disclose that. But my top stock pick is the iShares Bitcoin ETF, which is ticker symbol IBIT. It's really a proxy for the for Bitcoin, and it's a low cost way to play it. So if you don't have a crypto account, you can just buy this ETF and it's going to mimic the price action of Bitcoin. So let's jump into why I'm so bullish on Bitcoin, particularly at this moment. So first, let's go over why Bitcoin is unique. It's the first successful decentralized digital currency. There's no central authority like a government or a central bank that it relies on, and no single person, company, or government owns or controls the Bitcoin network. So the Bitcoin network is spread out amongst these miners. All of these miners have to, basically they have to solve these complex mathematical codes to back up the Bitcoin network and secure it. And then they get a small piece of Bitcoin. And there's several public companies who are in that space. And really the beauty of Bitcoin is the fact that it's digital scarcity. So think of it as digital gold. There will only ever be 21 million Bitcoin in existence. So actually it's more capped than gold because you can always find more gold. In Bitcoin, there's only going to be 21 million ever to exist. And we're going to talk about the importance of that. And then one last really important thing is it gives you global access. So as long as you have access to the internet, no matter where you are in the world, you can transact in Bitcoin or buy and sell Bitcoin, which is a important part here. So let's discuss M2 expansion and Bitcoin. So Bitcoin has loosely been mirroring global M2, which is the global money supply, with incredible precision. And global M2 is expected to soar, and Bitcoin should follow, in my view, if history is to repeat itself. And really what we're playing off here is the fact that global central banks are printing money to pay for debt. So US is the worst culprit of this. We have 37 trillion in debt. We continuously print money, but there's across the world, governments are printing money and it's debasing fiat currency. So really the issue with fiat currency is that there is no locked limit like there is for Bitcoin. And I would say this is something that you could bet on for the next couple decades. I mean, they haven't changed over the past 30 years, and I don't see it changing anytime soon. Really, when a politician gets in office, there's not a real motivation to stop that money printing. They just kind of kick the can down the road, and Bitcoin has been the answer to this. And really, here's the proof in the pudding. So a lot of people say Bitcoin is too volatile, but really it depends on the time frame. And if you go to a long enough time frame, you're going to find that actually there is a risk to not owning Bitcoin. So for example, if you change the unit of account for Bitcoin, it really is the most radical thing you can do to see the power of Bitcoin. So for example, when the iPhone 4S came out, it cost you 48 Bitcoin roughly. Now the iPhone 17, which is a lot more expensive in dollar terms, is 0.007 Bitcoin. So Bitcoin, it's digitally durable. It relies on this robust decentralized network. and that hard cap supply of 21 million coins coded into its protocol is a anti-inflationary component of Bitcoin, and it's really the genius behind it. So I'm not saying you have to plow your entire portfolio into Bitcoin, but just looking at this, even if you're a very risk-off investor, 1 to 2% could even make sense depending on your risk appetite. Now, on to seasonality. So throughout the past decade and a half of Bitcoin's history, there have been several devastating drawdowns, but historically, the strongest months are October and November from a seasonality perspective. October actually averages 29% on average. November averages 37% roughly on average. Now, October is off to a little bit of a rough start, but what investors need to know is usually that bullish seasonality kicks in towards the end of October, which we're in now. So I would expect the performance to turn up. You're actually seeing Bitcoin turn up a bit today. So market timing is difficult, but these seasonality numbers, Bitcoin's now been around over a decade, and these seasonality numbers do not lie. They tell a compelling story for fall and Bitcoin performance. Now, one thing I wanted to point out is I just typed in Google Trends, the word Bitcoin. And if you look here, you'll see that interest in Bitcoin is near multi-year lows, near 5-year lows. And if I told investors a year ago that Bitcoin was going to be over 100,000 and interest in Bitcoin or search interest in Bitcoin would be near 5-year lows, I don't think many people would buy that. So really from a contrarian perspective, it's tough to not like Bitcoin here. And then let's go to a sentiment perspective. So this is the coin market cap fear and greed index. It's kind of like what CNN does for the equity markets, but these guys, Coin Market Cap, have done it for the crypto space. And actually, crypto sentiment or Bitcoin sentiment is at a 27 level, which is fear. And it's the lowest or it's the most bearish or fearful investors have been since the April tariffs. So since Liberation Day, which pretty much every asset was getting crushed. But we're even nearing Liberation Day as far as the sentiment goes. And again, Bitcoin is not far off of its all-time high. So to me, this is extremely bullish. And then here it shows a Glassnode chart showing that Bitcoin on exchanges, it recently hit 6-year lows. So a lower exchange balance when there's less on Coinbase and exchanges of that nature, it means that there is a reduction in the immediate supply for sale. And it could create a supply shock. Essentially, what it means is these whale investors, they're looking to basically not sell their Bitcoin, and they're putting it off into cold storage. So this is really bullish from a supply-demand perspective. And then here is the demand side and what could help demand here. And really, a couple things investors should know about is the crypto regulation and pro-growth policies of the Trump administration. So the Trump administration has passed the Genius Act, which looks to put a regulatory framework around stablecoins. So stablecoins, basically, it matches itself with a dollar or similar currency, and you can send money a lot cheaper, more efficiently, earn interest on it. There's a lot of things you can do with stable coins. And actually, the Trump administration is seeing this Genius Act and the stablecoin revolution as a way to back up the dollar's global dominance, which has kind of come into question in the last few years. So Treasury Secretary Scott Bessent sees this as an important framework to back up the dollar because these stable coins are backed up by dollars, and there's a ton of demand for them. And then Trump kept his promise to fire Gary Gensler, who was the previous SEC chair. and he was kind of anti-crypto. Conversely, new SEC Chair Paul Atkins, he said one of his priorities is to implement Bitcoin and kind of push Bitcoin. And then the U.S. has set up this strategic Bitcoin reserve. So far, they're not using new funds to get Bitcoin, but what they are doing is any Bitcoin that is confiscated, let's say from an illegitimate website or a scam, that Bitcoin that is confiscated, the U.S. government has made the pledge to not sell it. So this is going to, again, help that overall supply. There's going to be less Bitcoin out there for the general public to buy, and it's going to continue that supply shock. And then Brian Armstrong, he's the CEO of Coinbase. He was an early adopter of Bitcoin and one of the first exchanges. And he thinks that Bitcoin could reach 1 million by 2030, driven by this regulatory clarity. He sees the European Union and other international nations adopting Bitcoin. And I'm not ready to go and say that 1 million Bitcoin is coming by 2030, but it's not really as crazy as it sounds. It would basically require a compound annual growth rate, or CAGR, of 52% to get to 1 million by 2030. And for context, Bitcoin has a CAGR of 84% over the past decade and over 100% since inception. So even if Bitcoin were doing under its historical CAGR, it could reach that 1 million level. And again, I'm pointing out all of the catalysts behind it. So I wouldn't say 1 million is guaranteed, but all the bullish pieces of the puzzle are coming together. And most importantly, the technicals are providing a low risk entry area here. So what you're seeing is the 200-day moving average, or this is the 40-week moving average if you translate it over to the weekly. And you can see that Bitcoin has continuously found support at this level. And then another thing that I like here is we're pulling back. So we're seeing a support and resistance flip here, meaning we're pulling back to the previous breakout zone. And that should be a big area of demand technically. And this is kind of what I love to look at as an investor, is the psychological framework behind a lot of investors, because a lot of new investors, amateur investors, they say, I want to buy the dip. I want to buy the dip. And then when that dip comes, the market is the master manipulator, and they never actually end up buying the dip. And then they look back in 6 months and then they say, I should have bought the dip. So what I would say is, don't just blindly buy the dip, but buy the dip versus a level. So we have, what I like here is we have a tight area to trade against. I never just blindly buy the dip and hold personally. What I'll do is I'll trade against a level. So maybe put your stop a few percent below that rising 40-week moving average, which is held so many times. If you get stopped out, you'll lose, a couple percent on it, but the upside continues to be very bullish in this case scenario. So what we're looking for is these high skew of reward to risk situations, and that's what we're seeing technically as well. And then one interesting thing is that gold is going vertical right now. And like with anything else, there's going to be pullbacks when something goes vertical. So I'm not necessarily bullish on gold, bearish on gold. I'm not telling you guys to short it. But if we do see some money come out of gold in the next couple months, which I wouldn't be surprised by, Bitcoin could be a big beneficiary of that. And you could see when gold topped in 2020, that set off the move in Bitcoin. And that was a staggering move there. And then finally, the U.S. Strategic Reserve grows. So this news just came out last night. The U.S. Treasury just added seized digital assets to its strategic Bitcoin reserve. The reserve grew 64% overnight, and it's now equal to roughly 3.5% of U.S. gold value. And the US now holds more Bitcoin than anyone except for Strategy, which is Michael Saylor's Bitcoin company. And a couple other things I wanted to point out is in a recent interview, VP JD Vance said that Bitcoin is secure, resistant to fraud, and a reliable digital store of value. So you can really see the top government officials, the regulators are really pushing Bitcoin, whether you agree or not. It's going to be bullish for Bitcoin. And one thing to watch into Tuesday is that the Federal Reserve will host its Payments and Digital Asset Innovation Conference. That's going to be Tuesday, October 21st in the morning. So we'll see if we get any fireworks out of that. But overall, that is my bull case on the iShares Bitcoin ETF, ticker symbol IBIT. That wraps it up for me, and I'm going to send it over to my colleague, Brian, who will cover his top stock pick. Thank you very much.
Well, thank you, Andrew, for your take on the Bitcoin situation and the iShares Trust for Bitcoin. I'm sure it's a great pick. I've got a little different pick here for you this week, and my top stock pick is going to be Tesla. It's TSLA. You guys all know it. You love it. They are reporting earnings on Wednesday. And I think that there's a part of the story here that isn't being discussed all that much. And I want to talk about that a little bit, but let's go through the numbers that we always love to see here in Tesla. So we start off with the ticker TSLA. There it is. It's a Zacks rank number 3, and that happens as the 60-day window for the Zacks rank closed a little while ago, even though we've seen a couple ticks higher. But obviously they make the Tesla cars, but they also do a lot of other things. Talk about that. That's what we call a tease in the business. I just teased what my big story is. The valuation is radically high, 270 times earnings. Gigantic $1.4 trillion market cap. Elon Musk is going through another fight to get a huge payday. These courts and these people are trying to stop him. I think he gets it. That's the long and short of that. All right, let's go to the numbers that we always look to. Are you beating the number? We can see a beat here by 24%, a small miss of 2 cents, a kind of big miss of 17%, 17 cents or 38%. And then last quarter, they beat by a penny. I think if you look at the absolute terms here for these two quarters, the September and December quarter, you can see that those are the quarters that make a little bit more money. So we're expecting this quarter to be solid like that as well. So when we scroll up to the estimates, we can see that over the last 60 days, this quarter that's going to be reported here has been ticking higher, 46 to 48 to 52 to 53. And it's coming a little bit on, the weakness of next quarter coming in a little bit. But for the full year, $1.59 up to $1.63. And then next year, look at this, 242. I guess holding still. There was this bump up and down inside of the window, but nothing to worry about. Now, here's the story. The company has been growing, but this year looks to be revenue contraction, which is kind of odd to say for Tesla when we've been seeing tremendous growth over the last several years. $93 billion in sales this year is what we're looking for. Next year, we're going to get back to revenue acceleration at 16%. 108 billion is what we're looking for. Let's take a look at our valuation real quick. We already talked about how the sky high valuation here is 270 times forward earnings. And that's a lot when the company saw revenue contraction last quarter of minus 11%. Price to book. Your value people would be screaming and tearing their hair out because we have 18 times price to book. The value investors only like 3 times as their max. Price to sales 15 times. And we can see their operating margins pretty low here at 6 and facing a little negativity there. The thing that I am focusing on as we jump to the chart is the robot. Tesla robot, the Optimus robot, it's coming. And by the end of this year, the company is expected to have 10,000 of them made. And, these robots are the future. They're coming. They are going to be here. They showed some of them before in one of their, events, and maybe it wasn't too impressive to some, but and there was talk that there was a human being controlling the robot back behind the scenes. But make no doubt about it, these robots are coming. They're going to cut your lawn. They're going to fold your laundry. They're possibly going to be making your eggs and coffee in the morning, and who knows what else they're going to do. But all right, so let's focus in on the chart here. We'll start with the tech wreck of 2022. Tesla felt it going from 330, 350 to 120. Started to rebound back, but missed a lot of quarters here as all that happened. Then we had the stock really run up after the election, and then the Doge and the fallout with the Donald, and everything kind of came back in. Now we're shooting back up to highs here, pressing 450 right now. And I think the stock is poised to go much, much higher. Now, I know these estimate lines aren't what you want to see because they're trending this way. And we like to see them trend the other way. But I think the overall idea here is that there's a big driver here with Tesla, and it's the robots. There's going to be 10,000 of them produced as of the end of this year. And I think that means we're going to see some big growth numbers from Tesla, and the excitement is going to come back to Tesla once again. That, along with the lower prices for some of their cars. All right, that's it for me. Thanks for joining us for this version of Top Stock Picks. Be sure to join us next week. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.